Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, January 25th, 2021. What I want to do in this video is take a look at the stocks. Of course, not all of them, but some of the bigger stocks, the potential market moving stocks that are scheduled to report earnings in the next week or so here. We have our big FAANG stocks coming up: Facebook, Amazon, Apple, Microsoft, and Alphabet. They're coming up, and some others as well. So we're going to go over those and what to expect, especially if you're new to trading as a swing trader. You should be aware of when your positions report earnings. And in some cases, if you have just index ETFs, in other words, if you're not trading individual stocks, definitely know your individual stocks. But more so, I always say, in trading, I like that it's called know your trade rule or know your position rule. Be familiar with the stocks you trade, especially, again, if you're new to trading. Be familiar with their history, how they tend to trade after earnings. Companies report earnings every quarter, every 3 months. I'm going to show you where to find that information so you know ahead of time, because there are many stocks out there, even some big mega, multi-billion dollar companies that can drop or rally 10% or more in that after earnings, and that usually comes in the form of a big gap up or big gap down, because companies almost always, with very few exceptions, they almost always report either well before the market opens or after the market closes to prevent excessive volatility during the trading hours. All right, let's dive into the charts. We'll go over those. All right, so here's SPY. Again, just talking about the trend line that I'm watching here. Primary uptrend line on SPY. Big divergences continue to build. No sell signals as of yet, but from when we get those, there's just so much in the charts, especially with sentiment indicators and other things, and a lot of divergences, overbought conditions that say when we do finally break trend on the majority of the major indexes, as well as some of the market leading stocks that I'm about to cover, that it could be a very swift rush for the exits. So if you're a part-time trader, you work in an office and you come home, catch up on the markets, whatever, you could have given back weeks of gains in just a single day, and that's not uncommon. That's just how it tends to work. So if nothing else, if you do work, full-time job and trade part-time, stops are a must. Stops are a must for every trader, but especially those that don't have the luxury of being in front of the computer all day. All right, so that's SPY, QQQ, comparable uptrend line right there, comfortably above it right now. All right, let's talk about who's going to report, where to find that information. All right, so if you go to the site, you go to the home page on the right side of the chart. When you're logged in, it brings you to the all the most recent posts. Resources right here. If you click on that resources link, it'll bring you to the right side of the chart, support center, and down here on the bottom, tools of the trade, you have an earnings calendar. So you can click on that. It'll open up Earnings Whisper, is the one that I like to use. I may have cut off the top of the page here, so I'll just scroll down for you a little bit there. There you go. I think you can see it. No, I have to go down a little bit more. Okay, so what you're looking at, it should default here to the calendar. If you navigate through the page, get back to it right there. And what it's going to do, you can see right here is a calendar. There's today. Since the market's already closed, it's now bumped over to AMC. That's after the market closes. In the morning, had you logged in, you would have seen it on BMO before the market opens. So there it is. And you can get an idea who's reporting. So let's take a look at this real quick. In fact, I'll just tell you right now. We can go Tuesday. That's tomorrow after the close. Most of your big tech companies tend to report after the close. Banks report, they tend to report before the market opens. Every industry is different, and every company is different. But again, most of your big tech tends to report after the close. And on top of that, industries tend to report together. The regional banks all reported last week. Then you had, you'll have the big banks. They tend to report all together in a cluster, usually within a week or two. Same with big tech and all that. So here we go. Microsoft tomorrow after the market closes. AMD is another big one. Starbucks, not a tech company, but just big names. Texas Instruments. You have two big semis as well as Microsoft. Big day for tech right there, right? Then you have Wednesday, next day, before the market opens. Boeing, big one, well watched, well traded stock. I'll go over the charts of some of these in a second. You have AT&T as well. And then after the market closes, again, this is Wednesday, Apple, Tesla, Facebook. So point being, we're almost certainly going to see some volatility this week. It could be to the upside, could be to the downside, could be a little of both, depending on how these companies report. report. So just again, kind of an FYI. And even if you don't trade any of these stocks or any individual stocks, if you're trading the NASDAQ 100 via QQQ or the S&P 500 or any index ETF or a sector ETF for that matter that holds these, those are likely to move as well. Now, a huge swing in Tesla, even though it's a component of the S&P 500 and NASDAQ 100, just like Apple is, it isn't going to move the S&P 500 as much because you have a lot more diversification than you do in the NASDAQ 100. They're more tech heavy. The NASDAQ 100 is, or that index, I should say, is more tech heavy. Okay, so there's your big names I wanted to point out. Then it kind of tapers off. There's certainly some companies worth watching on Thursday. Friday, you get a few Friday morning, almost nothing reports after the close because you're heading into a weekend Friday. So picks back up again on Tuesday is where the big ones are. Tuesday after the market closes, Alphabet and Amazon both. So that'll complete it. By next Tuesday, we'll have the FAANGs out of the way. We'll have 3 of the 5 out of the way in the next 2 days here, in the remaining 2 next Tuesday. So I'm going to go over the charts of those stocks, just those big ones right now. And, the takeaway is earnings season always has the potential to be an inflection point in the market. What does that mean? Well, if you've been in a strong uptrend, it can be the market, it could mark a top or a turn in beginning of a new downtrend or correction. Or if you've been in a correction or bear market, a good earnings season can turn the corner and spark a lasting rally. Or it could also be continuation. We've been in an uptrend, and if earnings, just they blow it out of the park, and it's more so about guidance as well. Most of the big companies nowadays do a pretty good job, not all of them, but most of them, pretty good job of managing expectations with the analysts. So there's not a lot of huge surprises, but what can often move the stock even more than what they report is what they say going forward. When they give forward guidance, they do that after the initial earnings are released. Then most companies will do a conference call and give guidance. Okay, now we'll quickly go through the charts of those in order of how they're reporting here. Microsoft, this is my daily chart right here. I want to say, technically, if you want to say they're in an uptrend because they haven't corrected and they're not far off their all-time highs. There's the all-time high. I missed that tool there. There was an all-time high little spike back in August or late August it looks like. We're just below it now. But the bigger picture, I think you can see I have a trading range shaded right here from here all the way over here. And that's the bottom of the range, about 199, and the top of that range is about 228. We spiked above it there, but didn't hold it long. Hit it there, hit it again. So Microsoft is going to do one of two things most likely after earnings. And it'll probably, a lot of these companies, I'll just say this, they tend to flounder around before earnings. Sometimes you'll get a little run up into earnings. Sometimes you get a little sell off into earnings with some profit taking. But for the most part, these stocks tend to kind of go into a holding pattern. Because a big institution, who wants to load up? It's, again, like I said, it's a crapshoot. It's a gamble. If you hold a stock in earnings or buy it right before earnings, you risk that stock making a sharp move that, and this is important, that you cannot control or mitigate with stop loss orders. What I mean by that, when a stock gaps down, gaps up or down, let's just say you're long Microsoft, you're long it right here around 228, and let's say that it gaps down all the way down here to let's say there's a whatever, we can say gaps to wherever we want. Microsoft's usually not going to, stock like this rarely moves more than 10% in a day on even big news, but it has happened. So let's just say hypothetically things are horrible. Microsoft gaps down here to the bottom of that range. It's about 199. That's about a 12% drop. And you have a stop loss order that should protect you if Microsoft drops more than 3% or more. Well, what happens is stop loss orders are technically orders that are hit, are standing if it's a good to cancel order. And if your order is at, just pick a number at let's say down here around 222, 221, somewhere, that order, once that price is hit or exceeded, will then convert into a market order. And the stock will then sell at that price. So it's not going to sell at your 221 stop loss order. The 221 price, when hit, triggers the order. And what happens is on a gap down, the stock is trading in after hours after earnings, and if it gapped down again, let's just say that number to 199, that's where it's going to open, and that's where your order would fill. You might say, well, Randy, I won't use a stop loss order because stop limit orders say fill me if the stock drops to 221, but only fill me at 221. Well, guess what? Stock gaps down below 221, it opens up at 199 the next day. Your order is still there. It is unfilled. You have a stop loss order, a stop limit order at 221, and you don't get that price. You don't get filled unless the stock then, because the stop part of it's been triggered, but the limit price, it says sell me only at 221 or better. You will only get filled if the stock happens to rally back up to 221. Okay, so there's a quick lesson on orders. Stop loss versus stop limit. Look them up, become familiar with them. Don't forget to do a good to cancel on those orders if you're in a swing or trend trader or investor, because a default on most orders is a day order. That means the order expires at the end of the day. Okay, so back to Microsoft. There's levels, big level. We've been trading. This is a big range, and this is what's gone on. A lot of them FAANGs, these market-leading big tech stocks, haven't gone anywhere now for months. Gone up and down in that range, but they're still within the trading range. And again, Microsoft is below where it was back in August. And one way or another, sooner or later, this thing will break out. So that's your numbers right there. About call it 228, 230. Upside break would be bullish. May or may not be the type of breakout that I would be chasing. Why? Because breakouts that occur with negative divergence, which this will have if we make any marginal new high anytime soon, will simply extend the divergences that are already in place. And as I often say, breakouts that occur with overbought conditions, which we're close to being overbought, and negative divergence have a much higher rate of failing than breakouts that occur without the divergence. So there it is. Now, just flipped over to a weekly chart. I'll be doing that during the video. I'll be toggling between a daily and a weekly time frame. If I don't make mention where we're at, just look up here and you can see maybe it's just cut off. Let's see here. Oh, there it is. You can also look right here. It'll say weekly or daily next to the symbol there. So this is a weekly chart. Looking at this, I can see it go either way. In fact, from the look of this chart, it looks to me like Microsoft will have more upside. It's not guaranteed, but where the PPO is turned back up, that's a momentum indicator, and it's poised to make a bullish crossover. And so should Microsoft break to the upside, what I think is the most likely scenario, will just simply rally for a little bit, days, weeks, maybe even a couple months, put in a marginal new high on this weekly chart. It'll be on the daily as well, and extend the existing negative divergence that's already in place. The indicators are lagging so much, it is a absolute certainty that anytime soon, should the stock make a new high, it'll still have negative divergence. It's not even close to being burned through, meaning taken out those previous highs there. So that's Microsoft. Last time we put in a divergent high on the weekly here, we had a drop of about 19%. There was a divergent high on the weekly, 15%. Divergent high back here, 21%. And I can go on and on and on. So they're usually good for double-digit corrections when you get those divergences, and you just need the sell signal. So again, focusing on this trading range, and I'm going to get to something here in Apple. Yeah, before I forget, because every time I do these videos, if I put a mental note, I keep going, I forget. So I'm going to jump forward to Apple and show you what Apple looks like. I had to inquire on Apple today. So here's Apple. And I can turn off all these lines or turn them back on, but either way, I have a boxed in trading range you can see here as well, similar to what I just showed you on Microsoft. So Apple's been doing the same thing. It peaked out back here in late August or so, pulled back, ran up to that same level. That's about 138, give or take, on Apple, and hit it on Friday and broke out today. So there's a breakout candle. I had somebody ask me, hey, did Apple break out? Is that a breakout? Yeah, that is a breakout. Absolutely. There's a breakout, took out resistance, well-defined major reaction highs, all-time high. But as I said, it did so with negative divergence. Now, look, of the two, what do you give preference to, at least immediately, is this. A breakout is a breakout until and unless it fails. So that's a breakout. On face value, it's bullish. I put a considerably higher rate or chance of it failing soon because of this negative divergence for the reasons I said before. But unless it does, that's bullish. Now here's the other thing to that. I don't, I avoid, typically will avoid a breakout, whether it's a bearish chart pattern or a bullish chart pattern, typically avoid taking it if the stock is due to report earnings for everything I just said. It's going to report and this thing's going to go one way or the other. So you have a much, much higher rate of a breakout failing if you take a breakout just before earnings, because it can be a crapshoot. It's going to go either way. So that's why I take this with a huge grain of salt. For that reason, Apple again is going will be reporting. When did I tell you? Wednesday after the market closes, and so that that's the stage. It's either will most likely either continue to rally and build on the gains, or it'll prove to be a false breakout. As I often say, fewer things in trading are more bearish than a failed breakout. So that's something we're going to watch. And now I'm going to kind of loop back to one that already reported. Kramer, dubbed the stocks the FAANGs, FANG, with Facebook, I guess Apple and Netflix in alphabet, and I then later dubbed them FAAMG, FAANG, because Netflix is a much smaller component. It doesn't have near the weighting of those other five I mentioned. It's much smaller, it just had a better ring to it. In fact, somebody even wrote an article about that. That's when I stated that's probably why they call it FAANGs. But anyways, that's Netflix right there had a very similar pattern to those Microsoft and Apple, with those major reaction highs, and then Netflix on earnings. See this huge gap right here, and here's a great example of know your stock. Netflix, this is par for the course. Netflix isn't, even though it's not as big as Apple or Microsoft, it's still a $255 billion company. It's a very large company. And there was a huge gap. So from the close of the previous day, the day before they reported earnings, to the high, that was 15%. And the gap, wherever it opened, somewhere up here, you're talking about 12 or 15% it gapped up that day, somewhere in there. So again, if you were, let's say, short that stock, you would have been smoked. You would have either had your stop loss order covered up there instead of right here, much tighter as you should have had it, or you had a stop limit and you're still short the stock and feeling pain, a little less pain today. All right, but what happened? Where am I going with this? I just showed you Apple. I just showed you Microsoft. This is so far a failed breakout. Netflix took out those two previous major reaction highs, all-time highs, to put in a new all-time high on when it reported, and that was last Wednesday. And you can see they faded that. And we're back well comfortably below that 574, give or take about, we'll call it 575 level. And we've also entered the gap. You zoom in, there's the bottom, the low that day. You can use, some people will use where the stock opened that day. I like to use a low, particularly in this case, and we're below it. Not by a lot. We closed right about there. In fact, yeah, if you want to split hairs, and I put the crosshairs at that low from last Wednesday, that's about exactly where we closed. Where am I going? This could just be, but a lot of gaps are back tested. And the top of the gap is support, and that's where we close today. That would be bullish if this can hold it. But if it goes much lower, if we get a close much below where we closed today, we've now clearly entered the gap. And again, I'm referring to below last Wednesday's lows. And then that would set the stage. Once the gap's entered, it's usually backfilled. That would send us back down there. And more bigger picture, so that would be kind of near-term picture. That'd be a big drop just to backfill the gap. The stock's got to drop another about 10%. But bigger picture would mean it failed breakout. And also, it's not drawn here because we didn't have that high until last week, but there's big old negative divergence. It's continued to build. That's what it looks like on the daily chart. And therefore, my expectation would be if that gap's back, or much more downside, we're going to go back to the bottom, at minimum, the bottom of this trading range. And that's been the MO lately. Watch, rinse, repeat. When you find a trading range, it's easy. You go short at the top of the range or sell your longs. If you short, you put a stop just above. And when we pull back to the bottom range, you cover shorts and or go long with a stop just below. Now, when you flip out, and I'll do this to a lot of these charts, when I go to a weekly chart, This is again how I look at the charts. I start on these smaller time frames, and sometimes a seemingly small correction that might be priced in or a small rally can have much bigger implications on the longer term time frames. I come out here on a weekly chart, and going back to 2012, here's a long-term uptrend line that Netflix is flirting with. We're just above it now. We have negative divergence. In fact, we had divergence right here at this high. That divergence continued to build. The stock was in that's that little trading range I just showed you, popped to a marginal new high. So that put in extended the divergence to right here. There was our last divergent high. Might not look like much on there, but the stock dropped from the divergent high on this weekly chart. It was a relatively small divergent high, 45%. This divergent high that we have now, it's really just an extension of this one that started back here. That's where the indicator started lagging, making lower lows with prices making higher highs. So that's pricing in what could be a very large correction or bear market. And there's the trend line right there, and we're not far above trend. My targets are 3387.40. That'd be a 31% drop. And then 200, and that'd be about a 64% drop. So again, we're in a strong uptrend. I'm not calling for that drop right now, but I'm very much open to it, and we'll take it one day at a time. Netflix is not going down to 200 if the stock market's going to continue to rip higher throughout 2020. That target would be most likely conditional that we're in a bear market in the equity markets. So as of now, if that trend line was broke, I'd look for that first target there, about a 32% drop. But again, why Netflix? They already reported. Just to loop back, it was the similarities in Apple and Microsoft that I just covered with you. And here's what Apple looks like on the daily chart. You can see weekly. I'm sorry, guys, weekly chart. I've measured out, and these are divergences. That was a divergent high right there, 62% drop. Ended with a divergent low. Go long, cover your shorts. And divergent high, 26%, 15, 16, 45% drop. 34% drop, 39, all off these divergent highs. And here we are again. We have divergence. When you zoom in, like I showed you before, I could easily see the possibility or the potential for a little more upside, but all it's going to do anytime soon is extend the divergence. That's Apple on a weekly chart. Microsoft, I think I already covered that. Yeah, I did on the weekly as well. Or if I didn't cover it, there's my weekly chart. Let me go through the rest of these that are reporting, and we'll get this video wrapped up. AMD, big tech stock. AMD is well above trend. I know I have a lot of lines here. I'll show you the salient levels right there. That purple uptrend line, that's your primary uptrend line. It's a nice one too. 1, 2, 3, 4, 5 distinct reactions. Should things go the wrong way for AMD, you have strong negative divergences, and that would be a minimum pullback target to measure it out from where we're at today. That would be, and it would also come in right with the trend line. I really like that. That's why that level's a magnet for me. If we start to correct on AMD, I would put very high odds at a reaction if and when that level's hit. Reaction being a bounce or at least a consolidation. That's about a 22.5% drop if hit. No sell signals now, earnings coming up. Here's what AMD looks like on a weekly chart. Beautiful uptrend line. This comes back from early 2016. Just a nice, clean, long-term uptrend line with a lot of reaction since 2016 there. And again, these big divergences continue to build. And so, Randy, you've been saying that for a long time. Yeah, that's what happens. They build, they build, they build. More often than not, they play out. They can build for months and even years when you go to these weekly charts. And that drop right there from that last divergent high was good for, I'm just measuring it out, 52%. That drop right there. So, you break, and that was above, that was in a bull trend. Only thing that broke was maybe some short-term uptrend lines. So if we break this longer-term uptrend line and that big 40-week moving average, see the red line below, how it comes in together, that's going to set the stage for a much, much larger drop. I would say I'll just give you a target for your long-term traders or anybody interested. And here's targets I'm looking at right here. First target on the weekly chart for a swing trader, we'll call it 59. You always want to cover a little bit above support if you're shorting. And then if things get ugly, target 34.80, we'll call it 35. stop along the way at 49. I can give you other targets, but that's not the point of this video. I just want to show you the levels to watch. Starbucks, I don't want to spend a lot of time. It's not going to move the markets, but there's my trend lines. This is the benefit of the doubt trend line right here. We have intersecting trend lines, right, or very close, but that's Starbucks, divergent high like everything else, but still in an uptrend. And there's your weekly chart. There's the trend line on the weekly. Oh, here's something I'll show you. The PPO and a lot of these stocks. You have the PPO poised to make a bearish crossover. You can see the PPO is rolled over. You can probably see it better on the video if I do this. The blue line's a PPO line, your white line's a signal line. When the blue line crosses down below the signal line, that's a bearish PPO cross. You can see that visually if you put up a PPO histogram. When you get a bullish cross, the histogram turns green. That means the PPO lines cross over the signal line. And I look for these what I call hills. You know, a lot of times when you're in a choppy market, don't use trend indicators like the PPO and RSI. They're just aimless. They're going back and forth, whipping around. It's called whipsaws. Look for a strong trend, clean up trend lines, you know, above key moving averages. That was a bull trend, then you had a breakdown. And so what I look for, and I like to call them hills. This is one big green hill, a few minor whipsaws, but that said bullish trend, be long. PPO is on a buy signal. And then you had a bearish PPO crossover. I circled it right here. And that started this downtrend. From there, you know, if you took the dual signals, the bearish PPO crossover and the trend line break, I'm going to try it. I'm trying to get my crosshairs on that level. Get a little snapback rally, but before all is said and done, 43% drop. And so what you had is just a little whipsaw right here. And there's not a single indicator that's perfect. So there's that little tiny whipsaw, just 2 weeks where it crossed above, rejected, and then the bottom fell out. So there was a bearish hill or trend. We're in a bullish trend, but look where we're at. Any more downside. So, you know, things don't go the way Starbucks wants them to for earnings. You probably break trend. You probably get that bearish PPO crossover. And that has longer term indicator. I'm talking trend lines here on a weekly chart. So it's not just swing traders. Trend traders can benefit from this. Or again, if you've been long a stock like Starbucks and you want to know where to get out, when to stop out, well, I just gave you. If you get a sell signal to short, you know, those that don't short, that only buy long could use that, you know, likewise as their stop loss order or, you know, a signal to get out of, take profits on a, you know, trade on Starbucks that they've made some money on. Okay, we're on the weekly chart still. This is TXN. They also report, as I said, tomorrow. Same story. Look at this PPO histogram. It's been falling, means the PPO has been starting to roll over. Any more downside, you're going to get a bearish cross. And usually when it starts to roll over, you usually get it. Here, you had a crossover right here. And then you had, that was your sell signal. If you shorted, we never went above it. We came back to that level, had a brief whipsaw right there, but other than that, it told you, hey, bearish trend, and that was a big drop in Texas Instruments. Once the signal came, it was about a 30% drop. So that's where we're at. Plus, you have a nice uptrend line. See, back then, I always say, yeah, I wouldn't short or go long based on bullish and bearish crossovers alone. I put, you know, things like trend line breaks and horizontal support resistance breaks, much higher weighting. Those I prefer to use as my sell signals. These just help to confirm and also kind of plant the picture. Hey, is this going to be just a short-term quick pullback trade, get 5, 6, 8, 10, 12%, you know, on a quick swing trade, get out and run, or do I want to position for a trend change and maybe not take the quick profits, you know, at the first target, maybe hold out and go for the 20, 30, 40%, you know, swing trade there or trend trade. Okay, here's BA, Boeing. We're still on a weekly chart here, and same story. Look at the PPO on Boeing, rolling over quickly, poised to make a bearish crossover. After coming off, we have this big green hill that, if that happens or when it happens, you're going to turn red. Last time, right here. In fact, you know, it's been a little. There was some grinding around, but this was, and I could probably, yeah, I'll probably loop over because this one reminds me of the S&P 500. You see right here on Boeing. Back in leading up to the highs in early 2019, we had a beautiful megaphone pattern. Megaphone patterns come at the end of a bull market. You have a bull run, And then all of a sudden volatility starts to increase. You have some pretty strong corrections, you have rallies, and it forms that, it's called an ascending broaden, no, I'm sorry, this is just a broadening wedge. An ascending broadening wedge looks like that, where it goes up. A regular broadening wedge is also called a megaphone pattern. That's what this was. And it was highlighted here. In fact, I have post I put up a while back called BA Boeing, the anatomy of a top. And, I'll never forget. I mean, the street, investors as a whole, the analysts, and everyone was as bullish as I've never seen on Boeing right around the top. And here, back on, you can see they're all time stamped. February 13th, 2009. I posted there are no sell signals in Boeing at this time, although the sharp divergences indicate that this megaphone pattern will likely play out for a major drop in the stock starting sometime this year. And that was the first one. I posted that in the trading room. Then I followed up with this one, I think, on the home page, saying, hey, we broke that megaphone pattern. We broke down, then we broke this trend line. In fact, the short was at the top of the megaphone pattern, and we did get that big drop. And then the stock, I did some follow-ups, including this one. We broke and back tested this major uptrend line right here. You see the uptrend line? And again, I still remember at this point, everyone was just, oh, that's just a correction. Buy Boeing, buy Boeing, buy Boeing. And beautiful. Look at that support. I mean, that was beautiful support right there. And I was calling for a drop down to 150 from 330. And I'm sure, everyone thought that was crazy. And that was, well, we'll just go full circle and just look at the chart now. Well, there it was. There was that trend line break. There was my 150 target. I may have added that additional 108.64 target. I can't recall. I've had that line on the chart. But we've come full circle. That was the bear market that was priced in. And now, why am I talking so much about the megaphone pattern? Well, hey, we've got the same thing, and I've talked about it before on SPY and the S&P 500. It's just larger. This is SPY. This is a weekly chart. You can see it as well on the monthly chart right there. That is a broadening wedge pattern, and I pointed out before. In fact, we had a broadening wedge pattern before the 36% drop into the COVID lows. What happened? This is just another thrust up within that pattern. So I don't know. That's long-term scary stuff right there. The S&P is certainly in an uptrend, but it's still within that large ascending broadening wedge pattern on the weekly and monthly charts, just as Boeing was before it fell. What did that do to Boeing? That took Boeing down from the highs with that second divergent high within the pattern. Before all is said and done, the stock dropped about 80%. Anywho, they report on Monday or Wednesday morning before the open. Daily chart, I don't have much of a read on it. I'll tell you, I'm near-term neutral, but again, I'm looking at that weekly chart. We're about to. It looks like the trend. Should we get that, PPO crossing down? Especially if it goes down below the zero line here, that will probably mean that this bear market rally, because that's absolutely what it is. The stock peaked in 2019. So far, it can be viewed as a bear market rally. Glass half full, you'll say the beginning of a new, bull market. But that's again where the stock probably hit those same targets on the way down again if we get that crossover. All right, let's go a little faster. Did I cover Apple? I think I did, because I wanted to jump forward and show you the similarities of Apple and Netflix. That's not it. AAPL. Like I said, on the daily chart, we're not going to know much until after they report. So take everything it does between now and then with a grain of salt. Sometimes it takes a few days after earnings for Apple to pick a direction. I've noticed that over the years, but I've given you the chart and the levels to watch. Tesla also reports Wednesday after the market close, and you can see on this weekly chart that I just toggled over to, big divergence building, negative divergence right there. Gosh, the last time we had negative divergence on the daily chart was right here at that high. I'll measure it for you. It doesn't look like much when you use log scaling on a stock that's moved so much, but if I can grab the top to the bottom, that quote unquote little dip, that was 53% right there. And again, that was off the divergent high right there. Divergent high there, same thing. So the drop in Tesla, well, you can see my targets. I've shared them before. And basically what we're looking at, you've got divergence on the histogram there, all the indicators. We had a primary uptrend line right there, which was broken. We back tested. That's what we're doing. We just recently back tested, and there's that divergence. So there's Tesla. There's what it looks like on the daily chart, and that would be the first target. About four. Well, there's a trend line that's going to come into play first. So when Tesla finally turns, if it went up another 20, 30, 40% and then turned, I might have higher correction or higher targets than I do now. But as of now, should a break, and I'm looking for a break of this minor trend line, I'd expect a reaction off this uptrend line first, something like that, most likely, and at minimum swing target back here to 464. That would cut the stock almost in half. It's at 880 right now, and so there's a swing or trend target for Tesla once these divergences finally start to play out. Okay, a couple more and we'll wrap up. There's Facebook. This is what it looks like on the daily chart. Recently it was notice pulled back to the both the 200-day, both 200 days. I have that's the exponential 200-day moving average, and I also have the simple moving average. Some traders use one, other traders use the other, and I love when they come in together, and that came in. Remember, I had that key support there, 245.63 on Facebook. It hit that, and it hit those 200-day moving averages, and that was good for a nice bounce so far off. We'll call that triple support. Both 200-day averages and the 243, 246 level, good for about a 14% bounce. But where does it go from here? That was then. This is now. Don't have the strongest read on this one, so let me just move on and follow up and finish up with Amazon and Alphabet, and then this video is over. Amazon weekly chart. This is strong. How can you not like Amazon from a fundamental perspective? But there's your long-term bull market uptrend line, comes all the way back to the 2008 lows. That's when tech and the Nasdaq 100 bottomed in the fall of 2008. The rest of the stock market bottomed in March of 2009. And it's a trend line that will sooner or later be visited once again, even if it's just a correction in an ongoing secular bull market, which this one's most certainly in. But that would be a potential pullback target. And like Microsoft and some others, the charts I could easily see the possibility. Not that I really don't know. We'll see which way things go in earnings. But should it go the way of Amazon and Microsoft, I could easily see another thrust up, and that would actually put in a little bit cleaner divergence. I like to see, you don't always get it, but clean separation on the peaks on the negative divergence or positive divergence. Sometimes you get this flattish type divergence, and that's what we have now. So technically speaking, we have negative divergence on the RSI and PPO on the weekly charts. It's a weekly chart. What to watch for sell signals? We need to do, you have a triangle pattern here, symmetrical triangle pattern right there, uptrend line there, some support levels, and I think I told you recently, 2943-ish right there, key horizontal support, and you also have the 200-day simple and exponential moving averages. So if you're let's say you're a bear, you want to short Amazon, you want to know where to cover it. If you wanted to take a shot ahead of earnings, it's a little bit risky, but some people like to do that. Well, that's your target right there. And if you're a bull and you're looking where to buy Amazon, that would be about a 11.5% drop. That's where you want to step in and buy. Probably be reaction. You could also take a pop above this triangle pattern, but again, anything between now and next Tuesday is going to be noise until they report, unless you can see some of the other big fangs that report this week. They may set the tone for the market, may or may not. We'll see. And last but not least, here's Alphabet. I know this is a busy chart. Here, I'll turn off all the lines and just show you what's probably most important. We have some pretty sharp divergences building here. There's your trend line right there. So that's what you're looking at, this rising wedge pattern on Alphabet, and that's what it looks like on the daily chart, a weekly chart. We go here. Well, we had a long-term bull market uptrend line in blue here, also off the late 2008 lows, because remember that's when tech bottomed, most things tech, and we broke it. Fast forward, we broke it here back in 2018, and we've been back testing. and that's it. We continue to backtest that long term, the blue trend line right there, with a, more importantly, what you want to watch for us, a potential sell signal is this trend line here, this uptrend line off the, what I call the COVID lows back in March. That would be a sell signal. And then other than that, it's it's in an uptrend. So the divergences say that uptrend is likely limited. The reward is not very favorable, but I think this level needs to go right here. I have in yellow about 1706, so we'll call that 1700. Let's move that down a hair, round it down. About 1700 is pretty big support on Alphabet, and that's a level I've been highlighting, I believe, in recent videos. If and when that goes, that will probably start a much larger correction. And again, if you're bullish, there's where you want to buy a pullback if you get it, with your stop somewhat below. All right, that's it. So those are the some of the big stocks that are reporting in the next week or so here, and yeah, we'll just wait and see. That's all you can do in the market. Have a trading plan, whether you want to be, like I said, whether you want to buy dips or buy breakouts to the upside. I give you upside, trading ranges and some upside levels that would cause, trigger a breakout on Apple and Microsoft and the others. So those are objective longs. They're also objective levels to short. So you decide if you're a glass half full or glass half empty person right now. And like on Apple, we broke it today. So what you want to wait for the objective short there. Long could make a bull could make an objective case to go long. Of course, if earnings wasn't next week or tomorrow, I'm sorry, but Wednesday on Apple. But again, a bear would want to wait till a failure, just like what we just had in Netflix, but maybe a little more downside in Netflix. A bear would want to wait for a failure to see that failed breakout actually occur. Right now it's a breakout that hasn't failed, and so again, two ways to look at it. Bull buys here with a stop below, bear waits for a false breakout, the breakout to fail, and then shorts it there with a stop somewhat above and targeting any of these targets there. Okay, we will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.